The biggest question people keep asking me is, what are my predictions on the real estate market in 2022? Now, after a few years of unpredictability, that's what we're going to discuss today. What's up, everybody? Welcome back. As always, I'm Bill Olson, your favorite YouTubing Charleston realtor. And yes, today we're going to try and predict the real estate market in 2022 in Charleston. And now, I'm not going to do this alone. I've brought along a good friend of mine, Dr. Joey von Nessen. He is a research economist at the Moore School of Business at the University of South Carolina. Joey, thank you so much for joining us.
My pleasure, Bill. It's great to see you.
Yeah, so let's dive right into this. You know, we've seen these past 2 years have been, to say the least, a little less than normal in the real estate market. We had that quick dive, a quick rebound, and then things just went crazy. And can you kind of elaborate on what your thoughts are on that and how that can affect us moving forward?
Sure. Well, I think first it's important to put in context the recession that we've seen and the rapid rebound that you alluded to that has come about over the last 20 months or so. So essentially, if we look back at 2020, we saw a recession that lasted for about 60 days. So from February to April of 2020, we saw a U.S. recession that, of course, affected South Carolina as well. And that was the result of a mandated government shutdown. So we saw a rapid loss in employment in South Carolina that generated a loss of about 14.7% of the total employment base in South Carolina. So a major recession, major employment losses. And then we saw a very rapid rebound beginning in April 2020 once the economy opened back up. And that in and of itself is fairly unique because in previous recessions, normally the cause of a recession is a failure of some market mechanism. So we can think back, for example, to the financial crash of 2008. But that wasn't the case this time around. The economy was in great shape going into 2020. This was an external factor, again, a government mandated shutdown that caused that recession. And the silver lining is that the fundamentals were in good shape. So when the economy did reopen in April of 2020, we've been able to see what economists call a V-shaped recovery pattern since then, meaning after a rapid contraction, you see a rapid rebound. And so as a result, now that we are 20 months past that reopening, South Carolina's economy is actually in very good shape. We've seen solid recovery over the last 20 months. And the way I like to think about it is that we were basically moving along on a decade-long expansion in 2020 going into the pandemic, an expansion that had been lasting well over 10 years, going back to 2009. We pushed pause on that expansion, dealt with this pandemic, and now we're ready to push play again in 2022 because most of the economic metrics in South Carolina, especially that have been recovering, are now either fully recovered or mostly recovered. And that's true in housing markets, and it's true in the broader economy as a whole.
You know, from what I'm seeing, like boots on the ground in the real estate is, you know, this is like, I didn't really pay attention in economics class, so I'm sorry. But, you know, the basic fundamentals are supply and demand. And right now, especially here in the Charleston market, we're below what we saw last spring when we thought we were at rock bottom.
Yes.
We're lower than that. But the demand has not calmed down any. Now, there are predictions of interest rates rising up just a tick. I don't personally think that that's going to be enough to change it. You know, what do you feel is going to happen, you know, with the inventory where it is and interest rates going up? Is that going to help buyers and sellers or balance out this market? You know, what's your prediction or your thoughts on that?
Well, I think we will see a bit more of a balanced market in 2022, or at least a movement in that general direction. Although I would say we're not going to get back to what we would normally think of as a balanced market this year because we've been so out of whack over the last year and a half. And we can see that in South Carolina housing markets in general, but especially in Charleston, where you see a bubble in the sense that we saw a rapid increase in sales activity and sales growth in the second half of 2020 and in 2021. And then in the latter part of 2021, just in the last few months, we've actually seen a pullback in sales activity. But as you alluded to, that pullback in the last few months is due more to supply constraints than it has anything to do with demand. Demand has remained strong. Supply constraints are more severe now than they were a year ago. We've seen building materials in short supply. We've seen more demand overall, and the combination of these factors have basically just not allowed for houses to be put up fast enough is the bottom line. So inventory levels now in the coastal markets of South Carolina are at about 1 month. A normal market is closer to 6 months of inventory overall. So supply very much restricted. And as we move into 2022, we can look at the different factors that are going to drive demand. And what we're basically seeing is that there are 4 primary drivers of demand in 2020 and 2021 that were contributing to this surge in sales activity. The employment recovery factor was number 1 that we talked about before. Employment growth is the single best predictor for overall housing demand because in general, you can't afford a house if you don't have a job. At least that's true for most people. We've had significant in-migration to the Southeast and to South Carolina in particular, and especially for the Charleston market. That's generating a high level of demand. The historically low interest rates that you mentioned has contributed to affordability. But the other big piece of this is the fiscal stimulus that we've seen that has come about from trillions of dollars being injected into the U.S. economy in 2020 and 2021. And that's elevated disposable income and savings rates for most American households and just given them additional resources. So you put all 4 of those together and you see a very strong demand for housing. All 4 of those have been propelling demand forward. And as we move forward, we look at the fiscal stimulus, which is waning. We're seeing disposable income come back down to more normal levels. And then interest rates, as you alluded to, beginning to go up. So we're basically moving from a period where we've had 4 strong factors driving demand down to 2. Now, those 2 are still important and still going to generate good growth for 2022, employment recovery and employment growth, as well as in-migration. But it's just not likely to be at quite the level that we've seen in 2021. So I think a tapering or a softening of demand is the way to think about it.
Okay, so it's going to be more like a new normal than normal.
Yes, I think so.
For a little bit.
So. We'll be getting back closer to levels of sales growth that we were experiencing pre-pandemic in the 2018, 2019, early 2020 period. But definitely moving towards a new normal. Inventory levels are still very low. And are we going to get back to normal in 2022? Probably not. So we're looking at low inventory for the foreseeable future. And that's also generating price appreciation, which is actually accelerated in the last year, including the second half of 2021. And again, if we had been seeing a pullback in demand, that's not what you would expect to see. So that's why the reduction in sales growth in the second half of 2021, we suspect is primarily a function of the lack of supply rather than any pullback in demand.
Yeah, I mean, you mentioned the months of supply. So for the viewers that don't know that, that's a metric that we use in real estate to say, if no new homes came on the market, how long would it take for everything to sell at the rate they're selling? 6 months is normal. Right now, most of the Charleston area is actually under 1 month. So weeks it would take to obliterate our inventory if things sell at the rate they're doing. And then to put our inventory into perspective with numbers, our old normal was anywhere between, I would say, 5,000 and 6,000 homes for sale at any given time throughout the year. And we're at about 1,200. So we are way below where we need to. So that, demand's going to either need to die or everyone has to put their house on the market for us to get back to what we were at. And even historically, Charleston has always been in that seller's market based on numbers. I think it's been 10 to 12 years since we had inventory at 6 months or higher as a total. So we're in high demand.
And I think
and we had.
I was just going to say yes, and that so you talk about this new normal that we are looking at forming, and I think getting back to your point about these inventory levels that have been so low for so long, is 6 months the normal in Charleston now? I don't think so. It's hard to see a scenario, at least for the foreseeable future, where we get even close to that again, because demand and supply are so mismatched at this point.
Yeah, I mean, we've always had that demand. I think our old normal was more supply levels, not months, not that average 6 balance months of inventory. Right. And, we're 4,500, 4,800 away from that right now. And that's a lot of houses. And, we're seeing a lot of these people move from higher cost states down here. We had talked about this right before the call. I'd like to elaborate a little bit. For people that live in South Carolina, Charleston is extremely expensive. But based on just average cost of living across the United States, we're just a hair above average. And is that correct,
That's
Joey?
Exactly right. And that makes South Carolina a very attractive destination for workers, for retirees especially. And when we look in general for Charleston and for South Carolina, we find that the bulk of the in-migration comes from the New England area. And so when you just do a direct comparison of cost of living, it's far higher there than it is here. So yes, while in South Carolina, we're used to seeing Charleston as an expensive market, most people in New England would not agree with that and see Charleston as a very attractive alternative. And so they're cashing in many cases on these multi-million-dollar bungalows and moving down to Charleston with a financial resource that they can then use to buy a house here. And so that's happening more and more. And that's a positive thing for demand overall as we look forward for the housing market. So that's one reason that we're very bullish on housing long term and on the Charleston market in particular, because these immigration trends and the population gains that the state and that Charleston are benefiting from, that's not likely to change. The southeastern United States is expected to be the region of the United States that will see the most population gains for at least the next 2 decades through 2040. And we can see that from multiple projections across from multiple sources, the census being the most commonly cited. But population trends are favoring the Southeast, and that really benefits Charleston from the perspective of demand if you're in the housing industry.
Yeah. And then, what plays into that, I mentioned this a lot on my channel, is the property taxes actually make our real estate more affordable here in Charleston County. It's roughly about 0.5%, give or take, of your home's value. And we see people from New Jersey where it's 2.5% of that. So, my parents live in Ohio. Their home is worth significantly less than mine, but their property taxes are higher. So, on some of the states it offsets, their property is cheaper up there, so their mortgage is cheaper. But when you look at those, like you said, those New England states up there, New York, New Jersey, Connecticut, New Hampshire, that's sometimes can be a $10,000 to $20,000 swing, especially with everything going virtual. You're like, oh, I can live in a warmer climate by the beach and basically get a raise to move here because they're saving $15,000 a year in property taxes, and they can get a bigger house.
That's exactly right. And that's a great point, looking at what the effects of the pandemic has had on professional norms and how that benefits South Carolina because people who are able to work anywhere are now able to live anywhere as well. So if you can stay home, work from home, and you're working for a company in California or in New York or anywhere else, and you can live anywhere in the country, South Carolina becomes far more attractive when you're not restricted to the geographic location of your employer. And that lower cost of living is a major asset. And that's true for taxes. It's true for housing costs. And it's true for overall cost of living in general. So South Carolina has a lot of natural amenities, a lot of benefits for South Carolina, and a very attractive destination if you can really look to live anywhere in the country.
Yeah, and I want to bring up one last point, and I want to get your thoughts on it, because we're also seeing a lot of retirees moving. And you had mentioned in your seminar that we had recently that we're seeing a 2-to-1 consumer to worker in migration, because basically we're very friendly to retirees. Now, how do you think that's going to play into the real estate market moving forward, or how has it played into the real estate market in general for us here in Charleston?
Yeah, that's a great question. I think this is a statistic that is often underreported, or at least not discussed as much, and it's very, very important looking forward, because it is relevant to the worker shortage that we're currently seeing in South Carolina and the U.S. Everyone knows we have a worker shortage. We see help wanted signs everywhere. This is true for most industry sectors. So you're going to be hard pressed to find a business that isn't seeing some sort of worker challenge right now. But if we look at that problem in South Carolina, it's actually likely to be exacerbated over time, because if we do look at the people moving in, as you mentioned, 2 out of 3 are actually over the age of 55, meaning that when people are moving into South Carolina, all 3 of them are going to be demanding goods and services. They're all potential home buyers. Again, great news for housing markets as a whole from a seller's perspective. But if you think about only one of those 3 is going to be in the labor force for any significant period of time, if they're under 55, then that means, getting back to the basics of supply and demand, we see a growth in demand that's just not being matched by the growth in the labor supply. So that mismatch is going to get worse over time because of the migration patterns that we're seeing for South Carolina. So the bottom line here is that the worker shortage that we're currently experiencing in South Carolina is likely to become exacerbated in the coming years unless South Carolina is proactive in addressing that. And there are a variety of ways that our state can do that, which we can talk about, but South Carolina has to be proactive there. So from the perspective of the housing industry, again, great news for demand in general. But if we're looking at this inventory problem and the challenge of construction and supply, then we've got to look at how the construction industry is going to get workers, and how are they going to have the resources, the labor resources, to continue to build and to continue to grow. So that's going to be a challenge that we have to take seriously and have to aggressively address.
So I kind of wanted to end on that, but you brought up what the state could do to kind of help this. Like, I'd love to get your thoughts on that.
Yeah, absolutely. I think the starting point is to build on the existing infrastructure that we have. And when I say infrastructure, I mean program infrastructure. So South Carolina has a very strong technical college program that has done a great job for decades in matching South Carolinians with employers. And we need to build on those programs. So if you look at Ready SC and Apprenticeship Carolina, both of those are award-winning, have been nationally recognized as being success stories in matching workers to employers and meeting demand. So I think building on those resources is really the starting point to try and further connect workers and to recruit companies to South Carolina, because as we move forward, it's basically a two-pronged approach with respect to employers. Number one, we need to help employers that are already in South Carolina fill the positions that they need. And then secondly, we want to continue to remain competitive so that we can attract additional companies to South Carolina. And in both cases, these programs can help to facilitate the worker needs for those employers. And then secondly, the other element here is making sure that South Carolina remains competitive for individuals as well, because if we are looking at South Carolinians as being able to work anywhere and to live anywhere, then we want to make sure that they are wanting to stay in South Carolina to live and to work. So making South Carolina, continuing to promote South Carolina as a low-cost state, as having all the natural amenities that it does, and essentially conducting what I would call a regional or a national marketing campaign, and thinking about effective ways of doing this. Because if you're outside of South Carolina, and certainly outside of the Southeast, you typically don't think of South Carolina necessarily as a place to go, or maybe even think of Charleston or Columbia or Greenville at all. That may not be on your radar. And that's not to say that South Carolina has a bad reputation. It doesn't. But no reputation, in a sense, can be bad. If you're not thinking, if you think I can live anywhere and South Carolina doesn't pop in your mind, then that's a problem. So it's really as much of a marketing strategy as well to recruit more people to the state and further basically promote the competitive advantages that we do have and the amenities that we offer.
So basically, if you're watching this video and you need a job or you have a job and you want to move, come to South Carolina because we have plenty of them and we need you. And even if you're retired, we're not saying don't come here because it's a great place. I plan on retiring here. So awesome. Well, Joey, thank you so much for joining me and kind of giving your insights on where this market is and where it's going. Because we can all hypothesize on stuff, but bringing that data and your expertise and knowledge is invaluable. So I really appreciate it. Thank you so much.
It's my pleasure. Thank you, Bill.
And thanks everyone for joining us. Drop down in the comments below what your thoughts are on this, or where you're seeing where you live, or if you're moving to South Carolina, why you're moving or why you're not moving here. We would love to hear all of that. And as always, we'll see you on the next one. Have a great day. Bye.